What's going on, traders, and welcome to this special episode where I'm going to teach you how to trade SPCE Virgin Galactic Holdings safely this upcoming week. Alrighty, in this video, we're going to do a technical breakdown. It's very similar to what we did on Tesla a few weeks ago, where we go through and do an analysis with just price action and volume, and then we'll go back in with indicators to either confirm or deny the bias that we come up with. We're going to break it down from the weekly to the daily to the hourly, 30-minute, and then finally the 15-minute to find some really granular levels. If this type of analysis interests you, then I'm sure you'd appreciate the weekly watch list video that we put out every weekend. It's a video where we do a technical analysis on all these tickers over here on the left. So if you're interested in that, go to the channel and check it out. Without further ado, let's hop in. So zooming into the weekly, you can automatically see that there seems to be some very, very strong sellers that are hanging out up here around the highs between $42 and $32 if we just want to play a nice round number there. So we'll go ahead and mark off some key levels. Obviously, we have our all-time high up here at $42.49. We'll mark that one in. This is a very key area of support. You can see it was the high of this week as well as the perfect exact low of this week. So we'll mark that level in there right around 28.67. Boom, got it. It looks like there's two wicks that coincide with each other right here. That will probably act as an important support on the way back down. Things below that, you can see there's another level here that will act as support. It was resistance, and then once we broke above it, it acted as support. So that sort of covers as far down to the downside that we really want to do on the weekly. Again, this might be a key level as well. This was obviously a key point of resistance this week as well. So we'll see if that lines up on the daily as well, but we're not going to draw any trend lines. We'll really wait for the daily for that. Alrighty, so coming into our daily chart, you can see that some of those levels we were mapping out really do make sense. You can see, boom, this was a resistance, or a support rather. This was indeed a resistance, and right now we're sort of floating around in the midpoint of this range here. So we'll wait till we break it down to the intraday charts to really analyze that. You can see that we did have this resistance hold up here. You can see 1, 2, and then we broke through it here. So that's cool to see. This was indeed a support, previous resistance. Nice to see that that did align. We can draw in that trend line that I was sort of talking about now. And this, again, it might not be an exact fit or the fit that we're looking for, but it's something like this certainly does have some merit where we have touch 1. Obviously, this was close 2, 3, 4, 5, and then 6, 7 sort of in this area. So there's certainly some data that supports having this trend line on the chart. So we'll keep that one in there. Let's break it down to the hourly. So this is where we start to put some more emphasis on recent price action where it wasn't so clear on the daily chart and weekly chart. So right now we can obviously see that there's a very key support right around this area here. If the tool would work, there we go. So we're looking at 32.83, anything lower than that, and it sort of looks like there's not much in terms of support below us. There's this tail here, so we could call that one at $30.50. That is a nice round number to act as support. So if this breaks, look for a flush down to 30.51. If that one breaks, obviously our next support down below is at 28.67. To the upside, we sort of have some key resistance as well in this area. It looks like, this was resistance, resistance, resistance. Once we broke above it, it sort of acted as support here. We did have a fake break down below it, and then it was resistance to carry on and carry forward here. So if we break above that, we could target our next one, which is sort of up here. You can see it coincides with this level quite nicely. Touch 1, 2, 3, 4, very well, and close within the web of resistance that we sort of talk about. It doesn't have to be exact, but just very close in that web. And then obviously the all-time high. So that sort of covers our hourly chart. Let's break it down even more. So the 30-minute chart is usually a good place to start making some decisions for what potentially could happen in the upcoming week, or day rather. You can see that we do have some tails forming here, and these are what are known as hammer candles. That being said, the normal implication of this formation of hammers is that the next move will be up. Obviously, there are some buyers hanging out around the support level. That being said, we do have lower highs forming, so we are sort of in a 30-minute downtrend, if you will. Next thing we need to see if the downtrend continues is obviously a new lower low. So if this breaks, again, we're targeting this area, but based on these two hammers, it sort of looks like to me that we might want to come back up and retest this $35.10 level. And last but not least, the 15-minute chart, which again is showing just a little bit more detail here, a fine granular level. You can see the close of the 15-minute bar on Friday was a green, full-bodied candle on increasing green volume. So that, to me, again, is implying that our bias based on those two hammer candles on the 30-minute chart might be correct, and that we could see a move in the upwards direction to retest this resistance here at 35.10. That being said, with all these points and touches to this support trend line or support price level at 32.83. If it does break, I would expect a nasty flush to the downside, just because anyone who is long above this area would now have poor position and would be likely underwater, obviously, as price continues in the downward direction. Another thing that I'm sort of seeing from this view is a head and shoulders pattern that has formed. If we get our tool out here, you can see this is sort of shoulder one. We could have head in this area, and this could be, if this would work, there we go, shoulder number two, the right shoulder. Now, normally what you look for on this is a break of the neckline, and in this case, this sort of $32.83 this price level is that neckline. So if that breaks down, again, things could get nasty, as we already talked about. This is sort of like what we call a reverse pressure cooker, where all these price touches to the on top of it form pressure, and boom, when it breaks, things get nasty to the downside. So let's go back with some indicators and confirm or deny what we're looking at here. Alrighty, so we started off with nothing, and right now what we've had added to the chart is the 200 SMA, which the price doesn't have enough price history here on the weekly chart to show, so there's no 200 SMA. This blue line is our 50 SMA. This set of three gray lines is our Bollinger Band, set at 2 standard deviations from the 20 SMA. So this middle line is essentially the 20 SMA. 2 standard deviations to the downside is our lower Bollinger Band. 2 standard deviations to the upside is our upper Bollinger Band. Our lower study down here is the CCI, Channel Commodity Index. It acts very similar to the RSI and MACD. However, I find it to be a little bit more responsive, and it makes more sense for me to use personally. So looking at what we have on the chart, it's no surprise that this is sitting at and above our upper Bollinger Band on the weekly chart. We didn't really need those to really determine that things are getting overextended here. As we've talked about in the past, things can normally ride the upper Bollinger Band no problem, and it's not a make or break if things are above. Yeah, is it a sign of being overextended to the upside? Yes, but as we already talked about, it doesn't take the Bollinger Bands to really let us know that price has gotten parabolic at this time. 50 SMA and 20 SMA are well below and aren't really telling us much. Our CCI is very overextended. Obviously, down here you can see that we have 100, 0, and negative 100 as the extreme and mid readings there, and we're well above it, up at 235. So again, did we really need that to tell us price is getting overextended? Not really, but it is just confirming. So breaking it down to the daily, I hope this isn't too distracting, and this is normally why I opt for having less indicators on your chart than more. You can see our 200 SMA, this green line, finally showed up. We have enough price data here. So 200 SMA, 50 SMA, again, very far away on the daily chart, aren't really going to be impacting our analysis so far yet. Our 20 SMA is closer, and it's sort of coinciding with the support trend line that we've drawn. So if price does make some sort of miraculous crash down into that level, then certainly it would act as a super support, and we could see some sort of intraday bounce or a longer term bounce if investors still believe in the mission of SPCE Virgin Galactic Holdings. So that could be a potential re-entry if you believe in the trend and want to continue to play this one long. Look for that on the daily chart. Again, our price levels are sort of up here, already mapped out. Again, the upper Bollinger Band doesn't really take a rocket scientist to tell us that price is overextended. We are getting back below that upper Bollinger Band, so that's nice to see. Things are starting to cool off. Pullback is starting to happen. Same thing down here on the CCI. You can see that we're starting to pull back into what is a normal high range here at the 100 level on the CCI. That being said, we'll break it down one more time. So on our hourly chart, you can see that we're well within the mid-range of our Bollinger Bands now. We're at sort of that 20 SMA sweet spot right in the middle. Normally, when you make a move from upper Bollinger Band to lower Bollinger Band, that is a complete turn, if you will. So if we do see that move, that would sort of coincide with that flush we were talking about if this price level here at 32.83 does break, and we would see the range to range essentially move happen here with the Bollinger Band. So keep that one in mind. Would act as a nice support here on the hourly to see that 50 SMA and that lower Bollinger Band start to coincide with this $30.51 level. That would act as a super support, if you will. The more things that you have coinciding, obviously the stronger the support becomes. So keep that in mind if we do see that flush down to that level. 200 SMA is still very far away. You can see now on the CCI, we're actually what is looking like oversold. So that's interesting to see here. Obviously, that's coming from this big red candle here, and then obviously selling off some more. So that being said, price could be cooled off enough to essentially just consolidate sideways, let the CCI recover a little bit, maybe come into neutral territory around the 0 line. And once that happens, we'll see that these two hammers here essentially do what they're supposed to do and create a new uptrend to the upside. We want to see higher lows continue and higher highs continue. Coming into our 30-minute chart, you can see, again, things remain quite the same. Our 50 SMA is now overhead and coinciding with that 20 SMA middle Bollinger Band at this 35.1 resistance level. So that will act as a super resistance and, a pretty good chance that price will make a move up to it. Want to consolidate sideways and not just bust right up through it. So keep that in mind if you're getting long here. Expect a move to this level, but again, it might take some sideways consolidation before it can really break out above it and get into that next resistance level up here around 38.62. To the downside, our Bollinger Bands are looking quite normal. We have them going sideways at this point. We're not really overextended to the upside or downside. We're sort of in the middle. 200 SMA, again, still well below us. And the CCI looking like it's starting to curl up here, so interesting. Maybe if these two hammers, like we said, can start a bounce, we'll make that move back up into the 0 line. And lastly, our 15-minute chart. So you can see that the CCI is essentially doing what we call a positive divergence, where we have a low here, a higher low here, and a higher low again, even though price up here was all the same. You can see we were flat here, flat here. So that being said, this positive divergence is a good sign to me to see a move to the upside, and it's confirming what we're seeing with this green candle, an increase in green volume. I think the move will likely be to this first resistance here at 35.10, and then again, obviously some sideways consolidation as we saw with all of those resistance factors playing on the hourly chart. But if we can break above it, then obviously our next target is at 38.62. If we do see some sort of move to the downside, the CCI will have to essentially flush and get back down into some of these extreme oversold territories, but we do have supports mapped out. We have 30.51, which our 200 SMA will start to coincide with on the 15-minute chart, so look for a super support there on any intraday bounce. And then anything lower than that is at 28.67. A couple of trend lines I'm seeing as this video comes to an end could look something like this, where we have all of these resistance touches 1, 2, 3, 4, and we're sort of struggling with that level now. So pay attention to that one. It looks like we're trying to break over it now. Again, one more check in the long side of things. Obviously, we're breaking above it. If we can maintain and break out above it, that makes that much more sense that we would go to the 35.1 resistance. But there's also sort of this support trend line that we could also draw that I sort of missed on our first sort of pass at this. And that looks something like this. And when we complete that, it obviously turns into some sort of a symmetrical triangle, and it looks like we're breaking out to the upside. So that being said, I think our bias is for a move to 35.1. If anything, we have all of these levels mapped out for us, so we're prepared for any situation that may arise. Alrighty guys, that's going to wrap up this episode of analyzing SPCE Virgin Galactic Holdings. If you enjoyed the video and appreciate the analysis, leave it a thumbs up. I really do like that stuff, and the YouTube algorithm does as well. Consider checking out the weekly watch list, and I wish you a green trading week.